A very good evening, good afternoon, good morning. My name is Queenie. I'll be the host for today's podcast, episode 26, talking about Crypto 101 fundamental about trading. So, before we start, I would like to show you guys a video before we start our topic tonight.
Welcome to UBX, a global digital asset trading platform dedicated to providing users with secure, efficient, and diversified digital asset trading services. Our goal is to become one of the top 5 secure and compliant digital asset exchanges worldwide. In 2025, UBX is embarking on a new phase of diversified ecosystem development and global expansion. At the same time, we have introduced a range of financial products, launched incentive programs, and unveiled the Firefox AI intelligent decision-making system. Next, join me in exploring the growth and innovation of UBX. In 2024, UBX garnered widespread market attention with its outstanding performance. These achievements have laid a solid foundation for us to reach even greater goals. UBX Global Development Initiative. 1. Product upgrades. Launching a variety of innovative products to meet the demands of a bull market surge, such as 100 times leverage trading and innovative futures derivatives, more than 500 spot trading pairs, Launchpad supporting spot listing, Earn section featuring new offerings such as mining pools, quantitative trading, and trending assets, opening the UBX staking listing pool, allowing everyone to participate in listing recommendations, a comprehensive strategy to build a complete trading ecosystem, UBX Global Development Initiative 2, new incentive programs revolutionizing the social ecosystem. The UBX incentive program has been fully upgraded, including Bull Market Rewards Program, includes trading incentive sharing, community co-creation, and exclusive early investment opportunities. UBX Creator Program encourages users to earn through contributions with the ability to recommend token listings. New social and trading model, evolving the social ecosystem from going solo to collaborative success, empowering every user to achieve value growth within the UBX ecosystem. UBX Global Development Initiative 3, upgrading the Firefox AI intelligent decision-making system. UBX has upgraded the Firefox AI intelligent decision-making system based on Fly Leopard technology. The core features of Firefox AI include rapid market analysis, real-time monitoring of market trends, smart strategy deployment, one-click implementation of investment decisions powered by Firefox AI, risk warning system, accurate identification of market risks through the advanced FireEye feature. Results: increased trading success rate from 52% to 91.77%, making your trading smarter and safer. UBX Global Development Initiative. 4. Expanding the elite team. 45% of team members come from top-tier exchanges. 30% have worked at globally renowned financial institutions. 20% possess experience in successful financial innovation projects. Core team members: CEO Rennie Sharif, Multi-Sector Strategic Investment Manager; CTO Nathan Blackwood, former NASDAQ architect; Risk Control Director Drake Thompson, former Goldman Sachs risk management expert. The team's expertise spans trading engines, blockchain, quantitative trading, and more, driving UBX's technological advancement and global expansion. UBX Global Development Plan. In the coming years, UBX will continue its global expansion and technological innovation. By Q2 2025, introduce Forex futures trading and begin preparations for NASDAQ listing. March 2026, complete NASDAQ mainboard listing. By Q4 2027, launch tiered fee structures, automated investment plans, and institutional account systems. Our vision: to become the trusted digital asset trading platform for 100 million users. Join UBX now and embark on a new chapter in digital assets with us.
Okay, so that is our introduction on UBX platform. It's the trading platform for everyone to use. So let us go into trading. So by building your finance future. So what is trading all about? Trading Trading is actually involve buying and selling financial assets with aim of making profits. So these assets can also be include stocks, bond, currency, commodities, and even more. So many items can be also be found in the trade, be found by tradings in the exchange. So successful trading require understanding market dynamics, analyzing market trend, and making calculated decisions based on available information and personal goals. So let us understand about financial market. So in the early days, trading began with bartering, exchanging of goods and services. This evolved into formal market with specialized broker and traders. So I believe in early days, before money even exists, uh, goods were actually exchanged through directly through barter. But there is limitation over it because it sometimes have double coincidence of ones, or they might have lack of standardizations. So when introduce of money have came by, whereby metal coins are created or even money improve, this money actually improve trade by providing a standardized medium of exchange. So later part, when it comes to the first stock exchange emerged in the 17th centuries. So this centralized location allowed for buying and selling of shares in companies. So the first stock company was actually the Dutch East India Company, which was firstly publicly traded companies. So actually investors could actually buy shares and receive dividend from company profits. So when actually it comes to the time of technology, electronic tradings came by. So the late 20th century saw the rise of the electronic trading platform, allowing traders to actually buy and sell assets over the internet. So that was also where the Nasdaq, the first electronic stock market, was created. It actually reduced reliance on physical trading floor. So the program trading become common in the 1980s. So leading to the there is a lot of transactions can be done over the internet. So the globalization of financial markets started during this period. So 24/7 tradings across global market become a reality. So internet brokerage firms are all starting to come out, and they allow traders, retail investors to trade from home as well. So finally, it comes to the borderless market, whereby actually till today, financial markets are highly integrated and global with the 24/7 trading opportunity across various asset classes. So even it actually created AI and algorithm that actually dominate trading, excluding transaction in milliseconds. We do not need to wait for a long period of time for any transactions, like in the past. So it also comes by to presence whereby the decentralized finance also come into place, whereby Bitcoin, which is introduced in 2009, the one of the first decentralized financial asset. So DeFi protocols also come by, allowing peer-to-peer finance without banks interfering. So let's continue and take a look at in the financial market, what are the type of asset we can do in the financial market. So stock markets, whereby publicly traded companies can actually issue shares that represent their ownerships. And also forex market, the largest and most liquidity part market in the world, involving the exchange of the currencies. So and also not forgetting the commodities market trading allow raw materials such as gold, oil, and agricultural products are being exchanged through the stock market. through the exchange market. So now we also have this cryptocurrency market, a relatively new market whereby digital asset are actually traded through platforms and also through decentralized exchanges. So what are the key trading concepts? So sorry, excuse me. So actually, when you actually look into trading, we are actually looking at a few terms whereby uh, there's bid and ask, whereby this is a price which a buyer is willing to purchase and the seller willing to sell. And also there you need to take note there is this spread, a term called spread, which is the difference between the bid and the ask price, representing the cost of executing a single trade. So in trading, we have terms called leveraging. So leveraging is to use borrowed fund to amplify potential profits and losses. And also volatility, the degree of price fluctuated in the market significantly risk. So what is actually bid and ask? Uh, you can actually just imagine you're actually trading Bitcoin in an exchange, whereby the highest bid price was actually around 42,000, which is also means that the buyer willing to pay the 42,000. So the lowest ask price was assuming 42,050, which also means that this is the price that the seller are willing to sell. So if you happen to play a market order whereby you buy at an ask price of 42,050, if you actually place a market sell order, you actually sell at a bid price, 42,000. So we need to understand, ask price is actually the price for um uh for buyer willing to actually purchase at, and the bid price is the price that the seller is willing to sell at. So what is spread actually means? So the spread over here is the difference between the bid price and the ask price. So for tighter spread, meaning to say it has higher liquidity, while a wider spread suggests lower liquidity. So just now I had an example of a bid price of 42,000 and the ask price of 42,050. This means that the spread is around 50. So with lower spreads, meaning to say uh it actually create with narrow spread actually create easier to trade, easier for trade to be executed. So if the spread is actually slightly wider, let's say if it's 500, there might be lesser trading activity or higher volatility. So what is actually we are talking about in leveraging? So leveraging is actually a borrowing fund to increase your trading positions beyond your actual capital. So usually it's expressed as like example, 10 times leverage means you control 10 times of your deposit. So assuming that you have $1,000 and use a 10-time leverage to buy a 10,000 worth of BTC. So if the BTC price happens to increase 5%, we should profit. You will actually profit $500 instead of the $50. So if the price actually drops by 5%, you actually lose 500 instead of losing $50. So it means to say if your percentage of the increase or decrease by more than $10, 10%, your liquidation of your position will be set and you will actually lose everything. So this is the risk of actually doing leveraging. So volatility is actually is actually the rate of an asset price fluctuated. So high volatility, meaning the price has largest price swing, And the low volatility is meaning to say the price is stable. So let us take an example like Bitcoin. If it can move 5 to 10% in a day, is considered high volatility. And an example of gold, if it's moving just 1 to 2% in a day, it's actually considered a low volatility asset. Okay, so let's look at some of the different type of asset classes that is in the exchange. Usually we will see stock, forex, or commodities. So stock actually represent ownership in the company, offering potential capital appreciation and dividends. So forex are trading currency against each another, driving the economy, factor, and global event. So if people would be trading commodities, it will be actually referring to trading of raw materials like gold, oil, or agricultural products, influencing the supply and demand. So when we talk about tradings, there's a few analysis that actually uh, allow us to read the market. So normally there is a fundamental analysis which actually involve examining a company financial health, industry trend, and microeconomic factors to determine its value. So there is also another way of analyze the market, which is also to analyze technical analysis by focusing on price chart patterns and indicators to identify trend and potential trading opportunity. So let's take a look at a few charting and technical indicators. First, you can actually see the trend line. So what are they? Trend line are actually straight line draws on the price chart to connect significant high or low, helping trader to identify the overall direction of the market. So they will highlight the potential support and resistance line. So how do we use them? So an uptrend is usually identified by drawing a line connecting all the highest low. And the downtrend is identified by drawing a line connecting the lowest high. So when price break a trend line, it may signal a reversal or trend change. So let's take an example. If Bitcoin has made a higher low consistently, drawing a trend line below this low can help spot potential support level. So next, we can actually look at moving averages. So it actually smooth out price fluctuation, showing trends and identifying potential buys and sell signals. So what are moving averages? So what type of moving averages there is? Simply, there is we call it as SMA, which is actually the simple moving average. It basic average of price over a period. Example like a 50 days SMA. There is also EMAs, which is exponential moving average, which actually put more weights on recent price, making it reaction faster to price changes. So how usually are they being used? So like in the bullish market, when the short-term MA moving average crosses above a long-term moving average. Example, we take off 50 days to 200 days. This actually will shows a bullish market. So let us take an example. When the short-term MA moving average crosses below a long-term moving average, it will shows it's a bullish, bearish market. So EMAs, the moving average are actually used for people to actually indicate the market bullish or bearish. So what are the RSI stands for? It's actually a measurements brought overbrought to indicate overbrought and oversold conditions. It also indicating potential reversal in price movement. So it actually measures the speed and the change of the price movement ranging from 0 to 100. So what does it mean? So if it's indicated more than 70, it shows actually the price may be due for a pullback. So it's considered overbought. So if it shows lesser than 30, it means oversold. So the price may due for a rebound. So if price make a new high, but RSI doesn't, it signals potential weakness. So if price makes a new low, but RSI doesn't, it signals potential strength. So if let's take example of Ethereum, if Ethereum's RSI's level is above 80, it it may indicate it's actually overbought and could be correct very soon. So this is how people use this relatively strength index to actually have the uh, analysis over a specific asset. So lastly, we have this MACD. So what is MACD? So it's actually a momentum indicator that helps identify trend changes and potential buy or sell signals. So moving average actually consists of two moving average, fast and low, and a histogram that actually measure the momentum. So how people actually use the MACD? So usually a bullish signal when MACD crosses above the signal line, and it will shows bearish signal when MACD crosses below the signal line. So if actually price move up but the MACD move down, it's actually signals weakening momentum of the asset. So these are some of the charting and technical indicators that actually a lot of traders are actually using it to monitor the market and and make the decisions over by buying or selling. So when we actually look at the insight in tradings, we have to take note of the risk management principle. We have to know your risk tolerance and also set stop loss. Diversify your portfolio and never invest more than you can afford to lose. So understanding how much risk you are comfortable taking before entering a specific trade. And also predetermining exit point to limit potential loss if a trade goes against you. And also remember to spread your investment across different asset class to reduce overall risk. And always always invest with a mindset of risk management and responsible trading. So we have to understand there is always higher risk to do trading yourself, but you can actually make potentially high income if you are able to understand what's the risk management they are looking at. So first, how actually usually traders do the trading strategies? Basically, for any particular trade, we have to actually look at defining your goal. Whether are you looking for short-term profits or a kind of long-term growth, or even if it's a kind of combining a short-term and long-term. Also, you need to actually look at the stock, either the asset class. Are you looking at stock or forex or commodities or cryptocurrencies? So next, you have to start to select your analysis method, how you're going to look at this particular trade or asset you are trading at. Either whether you are using the fundamental, are you looking at the company portfolio, or you are just looking at the trend line by using technical analysis. So the next important is when to buy, when to sell, or how you are going to manage a trade. There is different strategies, which I will not be sharing tonight. I'll be sharing in another session. But there is a lot of strategy that you can do to improve your trade. So last but not least, to actually set stop loss order and manage your position size effectively. Because I believe there is a lot of trader friends that I know. Some of them actually did very well, and some actually are very, I would say, they will actually don't stop loss and actually uh, burst their trading account because of the positions being closed for a wrong direction movement. So before we actually before you guys are actually interested in actually starting to learn how to do trading, it's best to actually start up with paper trading. So paper trading, actually most of the platforms or even the centralized exchanges do provide a paper trading account that actually allows you to do real trading with paper money. So this kind actually practice without risk. So develop your skill and test your strategy without risking real capital. So I believe a lot of new beginners actually start to learn trading. They would like to actually start immediately with their own funds, but actually sometimes it actually costs because of the lack of knowledge. It might cause you to actually lose a very big sum of capital that you actually deposited inside your trading account. So at least you can actually use the back testing on your strategy on historical data to evaluate its effectiveness. You can actually do all the strategize trading method on your own account, and you can actually use paper money to actually start to strategize and work on uh, work on how you have a study on the asset that you have chosen. Then this actually uh, allows you to actually have some prevention against real capital loss. So during paper trading, you can actually identify areas to improve and adapt your strategy based on the feedbacks by looking at the result or the previews of how the trade ends. So this actually by paper trading and back testing also allows you to build your confidence in your strategies before applying in the real world trading. So how actually this work? You can actually look at a lot of platforms that you can actually just open an account that actually allows the system will actually give you probably a amount for you to trade, and you can start trading and take that amount. Is just realize that amount is actually your actual capital. Then you will actually start to really analyze your trade and actually work on how you're going to make the profit, because they will actually give all the real figures and how much you have profited and how much you have lost in the summary. So there is many exchanges in tradings, not just for crypto platforms. There is also for stock market, for forex, and even the commodities. So firstly, when you actually want to start to do tradings, you can actually look at the fees. If you choose a brokerage, you can actually look at the fee and the commission charges, the trading fee and the inactive fees. So some platforms actually also feature charting tools, analysis features, order types, and also research tools for you to do your research and also to plot your graph. So most of the trading platforms are also having customer services. You have to look at those that actually are responsive enough and actually have the helpfulness support of the staff in the platform to actually assist on your day-to-day trade. Okay, so lastly is the security and reputation of the platform or the brokerage. So security measures, regulatory compliance and reputable within the industry. This is some of the highlights you have to look at. So usually in the trading account, you have to actually deposit your flat currency. It can be done through credit cards, bank transfer, or even they have e-wallets. But usually e-wallets require KYC, which you need to verify yourself as a real person. So now here we have a few look through some of the order types and executions. So what are they? So in tradings, there is what we call market order. So this kind of order executed immediately at current market price. So a market order is an instruction to buy or sell an asset immediately at the best price available. So let's say if you want to buy one Bitcoin and the current price of the Bitcoin is actually at around 42,000, or probably now now is I think 90 over thousand or 100,000. If you place a market order, you will actually purchase the coin immediately at the current rate. So the pros and cons for market order. So the pros are the guarantee order will be definitely filled, but the cons, disadvantage is you have no control over the price, because when sometimes there is a if the asset is actually very it fluctuates too much. Sometimes actually the spread probably is around more than 500 to 1,000. Maybe you can actually purchase at a higher price than you actually supposed to purchase. Assuming you are buying at 100,000 for one Bitcoin, and next moment, maybe the split second, the price actually dropped to, increased to probably 102,000. You are actually paying 2,000 more for the particular coin. So this is a market order. So next, we will have the so-called limit orders. So what are limit orders? So limit orders are actually executed at a specific price or even better. So it's actually an instruction to actually buy or sell an asset at a specific price or even better. So let us take an example of the Bitcoin as well. So currently the Bitcoin is actually at 100,000. So if you want to buy Bitcoin, only if the price drop to maybe 95,000, you can actually set a limit to buy order at 95,000. So if the price actually falls to 95, then your order will be executed. So, but if your price, if the price of the Bitcoin never drops to the 95,000, your order you will always remain unfilled, meaning to say your position will never be set to purchase at 95,000. So it's actually very useful for precise entry and exit by using limit orders. But the losing end is there is no guarantee the order will be executed. If it happens that the price actually only drops to 96,000 and rise up immediately, meaning to say your limit order will not be triggered. And that is, you are not able to enter the purchase of the Bitcoin at the price of 95,000 that you want. Okay, next we have the stop loss order. So what is stop loss order? It's actually triggered when the price reaches a specific level, limiting potential loss. So stop loss, it actually activates a market order once the price reaches a certain level. So we also call it as a cut loss or limit your potential loss by automatically sell an asset when the price drops to a set level. So let's say you have bought a Bitcoin at 100,000. Okay. So but okay, just to take note, for stop loss order only applies to futures orders or when you are doing leveraging. Okay. So when you actually do spot trading, you are purchasing directly. So you will not face any stop orders, stop loss or stop buy. So let's say you are purchasing a Bitcoin at 100,000 and you're actually buying long. That means you are expecting the price to increase. Then you set a stop loss at maybe 95,000. So if the price actually dropped to 95,000, the system will automatically sell your Bitcoin at the market price. So this actually protects the large loss for future trading or leverage trading. It works automatically. The good thing is it works automatically without a need to monitor the price. If you already have a price in mind, that you will cut loss if the price actually goes down uh, to the price to a lower price that you are not going to accept the loss anymore. So there is this stop limit order. So what is the stop limit order? It's a combination of stop and limit order offering more control over trade. So a stop limit order combine a stop order and the limit order for better price control. So let us take an example of a Bitcoin again. So let's say if Bitcoin is at $100,000 and you set a stop limit sell at probably 98,000 with a limit price of 97.8. Okay, simply said, if the price actually drops to the just now I said 98,000, the system will actually limit the order, and the system will place a limit order when the price actually drop to the limit sell. So it's also meaning to say it will actually will not execute any order if it doesn't drop to the price that you want. So this kind of stop limit orders is actually more complicated. It's actually have more control over particular price at a particular rate. So it prevents market order slippage. So this kind of order actually also may not be executed if the price move too quickly. So there is actually more example of order types, but I'll pick these four basic order types for you guys to actually look at. So let us do a final thought. Let's say if you are looking for best for fast execution. So give me a second. Okay, guys, please do not draw on my presentation. Okay, so because if you guys draw my presentation, there will be interruption. I have to clear it. Okay, let us continue. So if you are looking at best for fast execution, definitely a market order is the most easiest to set. So if best for controlling entry price or exit price, a limit order will definitely be the best for you to make the execution. So for stop order, it's meant for risk management. It's allow you to cut loss and prevent losing, potential losing further. And for stop limit orders are actually more amateur traders. They will actually set because they have a price in mind. If they only intend to purchase if they have reached the targeted price before kicking in the limit order. Okay, let us look at how you can manage your trade. So actually look at the market, monitor market condition, actually allow you to stay informed from market trend, news, event, and economic indicators. Okay, you also can adjust your strategy, be prepared and adapt your training plan based on the changing market condition. Okay, so also make use of the stop loss function to maintain stop loss order and control your position size to limit potential losses. And always remember to take your profit. So know when to exit a trade and lock in profits when the market move in your favor. Okay, so I have a few examples of people actually trade without taking profit because they will assume the market will always be in their favor. So the best advice will definitely be by taking a profit and keep in the pocket. That is then consider a profit for you. If you haven't taken the profit and actually suddenly the trade goes against you and you are actually making the loss probably within split second or minutes. So always remember when to cut your loss and also when to take your profit. And last but not least, not to be greedy because a lot of people tend to be greedy and actually do not want to take the profit and assume that it will always be in their favor. And that is the time where the title will change. Okay, next. So this is the most crucial to every single traders or even investors. So actually every one of us, if you are planning to step into trading, we have to minimize emotional bias. So recognize fear and greed, acknowledge that this emotion and how they can impact your decision making. So bias refers to the influence of emotions on making decision making. So in tradings, this can manifest leading to amateur selling or avoid trades. Uh, because probably feel that the market will go against them, so they dare not even execute any trade and just probably look through day by day and do not even make any movements. So greed is also a very important factor that actually increase uh, to every individual's traders, resulting actually holding onto even losing positions or over averaging. So greed is a very strong emotions that actually causes trader to make a lot of loss in trade in the stock markets or even the crypto markets. So and last but not least, being overconfidence can cause traders to ignore signal or market reversal. So some of the strategies to minimize emotion is actually to develop trading plans. Okay, also set realistic goals and be practical. Mindfulness, always have a techniques such as having some meditations by actually controlling your emotions and not just goes against the trend. Okay, stick to your strategies and always always avoid impulsive decision driven by fear or greed, like I mentioned just now. Okay, so sometimes actually use stop loss order is better because it actually prevents emotional trading by setting predetermined exit point for trade, because you can actually calculate your loss and don't make further loss if the trend or the, the wave is against you. Okay, so uh, how to minimize? You can actually also seek support from other traders or mentors in the financial world, or some financial advisors for guidance and support, because by experience you can a lot of traders can actually get you to the emotions they have been through. So emotion sets only to very new traders. Once you have trade long enough, the emotion tends to be covered by the knowledge that you have. Okay, so tradings, probably you might need to know some implications between different countries. There's tax implication on tradings. So, capital gains taxes on profit earned from selling appreciated assets. Some actually loss can also be used to offset taxable gain, reducing your tax liability. And also understanding meeting reports requirement for trading activity. Different country actually have different requirements. Or if you are not clear about it, you can actually also seek for professional advisor on taxes. So tax is actually very significant across different regions due to different in the tax law, classifications of digital asset and government policy. So some examples like the US for crypto trading is treated like stocks. So for short-term or long-term gain, you might be taxable for trading stock markets or crypto tradings in US. So like some countries like Singapore, we do not actually have, there is no capital gain on tax, gain tax on trading cryptocurrencies. So trading profits are actually not being taxed in Singapore. So if trading as a business, they might be subject to corporate tax, but for trading in platforms in Singapore context, I believe there is also another country in UAE is also do not have any uh, tax applies to traders for crypto. So so some countries do not have capital tax like Singapore or UAE, and unlike some other countries like US or India impose strict capital gain and income tax. So some trader actually might be taxed if it's actually under some businesses. So these are actually some implications on taxes against the profit that you have gained in tradings. So always actually tracks your and review your performance in your tradings. Always track and keep detailed records. Every trade include entry and exit point, profit loss or reason for the trade. So I have a lot of traders friends actually like to write physical notes on the particular trade they have purchased. The old Usually the old timer will actually write down what asset they have purchased at what price at what particular timing. So when they actually close the trade, they will actually also record down the exit point and also reason, probably a note, a remark for why they decide to exit. So these are all very important notes for traders to keep track of why they did the decisions on this particular trade. So always evaluate your strategy, analyze your trade perform to identify area for improvement and refine your strategy. So always look at the traits that you actually work on and see whether is are you able to perform it better to earn more profit through this particular decision or action made. So also look at recurring trends in your trade decisions, how they impact your overall result. So some of my trading friends actually mentioned to me before, you do not need to trade many asset or even many trade. You just have to probably focus on maybe 4 to 5 uh, usual trade and just focus and monitor their market trend, and you can make profit just by these few trades will do. So these are some of the strategy uh, when you can improve on your performance. So always adjust as needed because in the trade in tradings, there is no fast and right rules on how you are going to make your decisions. Be willing to adapt your strategy based on performance, and also don't forget about the market conditions. So these are some of the building trading routine that I have made to share with you guys. So always set a clear goal. Define your objective. Determine what you want to achieve, and always set the time frame and decide whether your goals are actually short terms or long term. Next, always remember to do your basic homework or market research. Always stay informed about the market news, economic indicators, and relevant event, because all this will also affects the trade that you are looking at. So keep track of economic report can impact trades, because this was assuming in the past, probably last few months, if you are monitor the uh, President Donald Trump presidency, you can actually also realize a lot of cryptocurrency also affected by whatever decision or whatever uh, comment that he has said. So next, we can also develop a trading plan. Always develop a strategy, create a plan that outline your trading approach, including entry and exit point. So establish rule of managing risk, such as position size, what kind of size price fund you are planning to invest in, and always prepare a stop loss level you are willing to lose at. So next, always do a pre-trading routine also. Probably before you start your trade, always do a review on your trading plans and adjust based on the overnight market movement. So because depends on your region, time over your country, there might be, because trading will trade 24/7. So it will definitely have different movements after overnight in your region. So always do a review over your trading plan before you make any decision or make any trade execution. So after you have made all this preparation, trade execution, always stick to the plan, the trading plan, without letting your emotion influence your decisions. So do not let the fluctuations on the market stop you from continue your uh, continue your pre-planned trading. Okay, so after all this, need to analyze the performance after the positions is closed, or your tradings is actually you have taken your profit. Analyze them regularly to review the tradings and identify what kind of strength or weaknesses the strategies have. And next but not least, always look for other traders to come in, or even join a community if you are very interested in tradings, and get the experience from them, or even uh, come to our podcast. We will actually share a lot of market updates to every individuals, every UBX members. Okay, so I have com I have done my sharing over on the tradings or the fundamental and basic about tradings. So hope you guys have an overview on how trading works. And tradings is the exchange of items, uh, except it's actually can be done over the internet. You do not have to be physically around to actually do the exchange. So trading can allow you to make high profits, but it will also give you very drastic, uh, make drastic loss. So do actually do your preparations and manage risk management well before you move on to start doing any tradings. Okay, so thank you for listening, and I hope you guys enjoy the podcast for tonight, and hope to see you guys very soon. See you guys tomorrow on our podcast episode 27. So thank you very much. I'll stay tuned with us. Bye bye.